And I'm back. Hey, Josie and Joe. I had nice to meet you. We got them Arcadia at the opening this morning. Anyone else traded Arcadia? I had Arcadia, but I didn't trade it for one reason. The daily looks to me like it's so extended. The gap up was so big and I didn't like it, but it was perfect. This was a nice hammer around here and then a squeeze above view up and above this around here. Now this is a bearish engulfing sandwich, which is a bullish pattern with a fake breakdown. And yeah, this was totally perfect. I like your trade. For a 2-minute open range breakout, this was definitely perfect. It's around $28, which is exactly the breakout area. But I really didn't expect it to continue. Hey, Safe. And hey, Zach. All right, so it's 12 p.m. We can start. Hey, MW. All right, let's see what we had around here. This is J-Bone trade. Привет, Arthur. J-Bone traded NIO on an ABCD pattern type 2. Let's bring this epic pen. Come on, come epic pen. There it is. Awesome. So NIO, I didn't like it much to the long side. I liked it more to the short side. Why did I like it to the short side? Because the daily chart looks weak, the daily chart pulls back, and the daily chart forms a reverse ABCD pattern. We gapped up today, which is slightly a strength sign, and we know that if stock gaps up, it could just run at least a little bit in the direction of the gap, and at the same time, it could fill the gap. So both plays around here could work, the long and the short. I personally wouldn't have traded the long play because of how the daily chart looks like, and because the daily is close to the 9-moving average. And the 9-moving average is strong moving average for me, no matter what time frame I'm watching. If stocks are trending, they're respecting the 9-moving average. So this around here, the daily chart didn't show me strength, but the 60-minute chart showed me strength. If I see that this is weak here, but strong here, not every time, but most of the time, I'll be just bailing with the trade because those two contradicting each other, and I want both the daily and the 60-minute chart to support the same direction. Anyway, regarding the setup itself, this was an ABCD pattern. This was a decent hammer around here. Great 15-minute candles, right? And on the 5-minute chart, you took an ABCD pattern here. I honestly don't like this much for an ABCD pattern type 2. It's more of an ABCD pattern type 3 because this was, this is the 2. Sorry, let's take a look at the 5. Yeah, even the 5 is parabolic pullback. Why is that? What is a parabolic pullback? The parabolic pullback is basically a pullback which happens after a parabolic move. And here you can have 1, 2, 3 candles. After 3 candles, what can we have? We can have a parabolic reversal and target the 9 on the 5. This around here is the parabolic pullback, and because of which I would need to wait for the W shape before I take the setup. Does it make sense, J1? ARG, Ariam, Jonah, and so on. How do you add to the chart that template? This is not template. This is notepad, and where it is? It's on Windows. If you're asking how I am doing my reviews, and actually some are asking me how am I doing my reviews on Twitter. I basically put the time itself here, and I type on it using the Epic Pen, and then I take a screenshot. And finally, I save the screenshot and I upload it to Twitter. That's the way I do it. I thought it was type 2, but let's get back to it. Yeah, exactly. I mean, it turned out eventually into type 1, but basically, if you have a parabolic reversal, this is a type 3 and you want to see a W shape. Awesome. Let's take a look, or let's continue. Arthur. So Arthur traded NIO there, And this around here was a parabolic reversal, right? It's not literally parabolic. It started getting parabolic by the end, but you could see around here, 1, 2, 3. We're having 3 consecutive candles. If you're having 3 consecutive candles, simply don't trade the trend. Wait for the reversal. Enter a little bit late on this one. I know you had your stop loss at this place for a small reversal and shoulder on the 1 minute chart. But on parabolic reversals, the closer your entry to the low of the day, the better it is, because sometimes they just don't run a lot. First of all, you have good risk to reward, and second of all, you will at least get an early partial with an early entry. Other than that, everything was good. I like that you didn't chase it here, because that would have definitely messed up your risk to reward. You entered after the pullback and put your stop loss at a new 1 minute low. Joe traded can. Now the 15-minute chart here range bounded, and I like that, right? And what we are having around here, we're having a fake breakout. After the fake breakout, we're squeezing all the way into the middle of the range, or dropping into the middle of the range. Once the stock goes into the middle of the range after a fake breakout, we're no longer interested in a long, we're interested in the other direction trade, which is the short. So our short buys would have been somewhere at around 20 to 40 or so, somewhere around here. Now, I wouldn't have to, oh, sorry, this is the 5 minute chart. Yeah, there it is. Now, this is cool. Yeah, this is the first candle. This is the second candle, and you can definitely short it on a new 5 minute low. I wouldn't have done that because the favorable direction overall is to the long side, and we're staying above the moving averages. I definitely need to check the daily chart and how the daily chart looks. I wouldn't have shorted it only because the moving average is below. Other than that, it was a good short. Why did you do this though? What was your stop loss, Joe? Because you got the entry. The entry was late. Honestly, it's on this in the middle of the second. But again, what made you exit? With an entry around here, stop loss should be with an entry around here. Stop loss should be at least here. That's the technical stop loss. You can tighten it, but even if you tighten it and had it at a new 1 minute high, it worked out. There was no reason to partial. You can't have your stop loss within the candle because we know that stocks, I mean, it will not just go straight down, right? It will go, the candle will dance a little bit. It will go up and down, then the next candle will open and it will also go a little bit up and then a little bit down. So this is expected. You can't have your stop loss at break even only because of that. The second thing, I don't think this was a good risk to reward, right? So this would have been, would have needed to be your stop loss. And look at this risk to reward. If your stop loss at the beginning is view up, and then you're taking this partial around here, that's like 0.2 R. You don't want to go for small rewards like this, risking so big. So you are okay with letting it go all the way up there and getting a full loser, and getting this small partial and exiting the rest at break even for, I don't know, 1 R profit, 1 R loser, and 0.2 R profit. This is not a good risk to reward. Either avoid the trade or hold it for at least 1-to-1. That would be the best thing, okay? Now this around here is decent, but I guess we did the average true range on this thing. Looking at this move around here, that's a $3 move, and let's take a look at CAN. Let's take a look at CAN here. Because this. Yeah, so you could see that the average true range of this thing is sitting somewhere around $3, right? I mean, it's usually below, but started going up and it's going to $4, but the average true range on this thing is somewhere around $3, and it basically did the whole average true range move to the downside. You can't really force it for a continuation after it did the average true range. That's where this entry would have been better to be avoided. In terms of setup, this was a perfect setup. It dropped down, it started going sideways, it's rejecting the 9 moving average in the 5 minute chart, and it's making a new 5 minute low. This is a perfect reverse ABCD pattern, but we don't trade an ABCD pattern only because there is an ABCD pattern, right? We need to look at more details there. And one of the details is the average true range, and the average true range was already extended, right? Awesome. So let's take a look at this thing. Nadia traded SQ, and SQ, the daily chart gapped up, which is good. The 15-minute chart is above everything, which is also good, right? At the open, it's dropping down, so we definitely need to avoid this drop down, or at least I personally would have avoided this drop all the way down, because the favorable direction is to the long side, and I prefer to wait for a setup to the long side. Now, after the drop down, it formed a small double bottom where Nadia took it to the long side. Honestly, Nadia, I would have waited for the engulfing to complete, and I would have taken it on the next 5-minute candle with the stop loss at the middle. Why is that? This is a candle around here, bullish engulfing crack, bullish candle engulfs the bearish candle. You want to make sure that it did that. Then the next candle cracks. And what's our stop loss in these type of patterns? The middle of the candle is the stop loss. Taking it around here because there is a double bottom was okay, because there was a setup at least. But this thing could have just pulled back and then continued dropping down for a reverse ABCD pattern. Now, it's not a setup we would take, right? But it's still a possibility to happen, and we want to minimize those moves, those moves against us. How can we minimize them? By applying slightly strict rules and trying to visualize what might happen. You see this, what happened around here? I'm dying. What happened around here could have happened around here, right? But this was a good ad. This was a good ad because at least it was in the direction of the trend. You had your entry early, and after the hammer, you're adding to your position with still keeping your average low. Nice partials all the way up. Are you still in it? Or you just built all out at 255? All out? It was still a good trade. Good job. Little bit risky entry, but other than that, it was awesome. Good job, Nadia. Zach, let's see what you did. So this thing is gapping up. I will be definitely a little bit more long biased rather than short biased. Let's take a look at the 60-minute chart. The 60-minute chart looks extended to me. This is already a huge move in the pre-market. And I told you, if a stock does most of the move in the pre-market, I just stop watching it or trading it. Zach, was this a short or long? Because if this was a long, I personally would have avoided it. Look at this. There is a range here, and you're breaking the range to the downside. And now this is a retest to the range. Yeah, that was early. We're interested in long once it goes into the middle of the range after the breakdown at least. So it broke down, and now this is a retest. Yes, there was a pattern at the open. The bullish engulfing, right? And there was the crack around here, but this is not enough. Remember what you said, candles are confirmation to a setup we're seeing. The setup we're seeing around here is just a breakdown, not a breakout. If this here happened here, it would have been a good setup, right? Like you just move those two around here, and then you're having like the red candle and then the white candle with a new high. That would have been perfect. You're going with the overall trend, and you're going for the breakout with the setup, right? But having only the candles against everything was a little bit risky. The stop loss though was technical. On this setup, you definitely have your stop loss in the middle of the range or in the middle of the candle. That's more than enough. You're welcome. All right, Bobby, let's see what you did. So you traded RKT for a 5-minute open range breakout. It's close to view up, which is decent. It's breaking the pre-market high on a retest. Nice entry and quick partials. A little bit early partials, right? I mean, I know that your risk is small, and if you hit the 2 Rs or more, then you can definitely partial. But with a good entry like this, I would expect at least a breakout. I mean, the first partial was a little bit early, but these are around here decent because at least you waited for the breakout. So good job. I mean, were you watching it around here, Bobby? You weren't, right? Because this was a perfect entry. Definitely, rather than waiting for the pullback, catching it around here would have been like perfect. All right, they're done. Let's see what you did. SQ 60-minute chart, really decent. I like that. We reviewed this one, right? The 15-minute chart is decent. The 5-minute chart you're getting on an ABCD pattern. Now that was risky. Why is that? This is a parabolic pullback. Multiple consecutive candles. Oh my God, let's bring the yellow color. Multiple consecutive candles, and it's forcing itself into the 9, so we need to avoid it. This around here after the fake breakdown and it's coming back up after the hammer was decent, right? But this around here was risky a little bit. It could have just simply made a lower high and dropped down. And let me show you an example of that. I mean, other than that, like with the rules, the trade was decent. It wasn't bad. It needed a little bit more patience. So let's take a look at TLRY quickly. This is the horrible part on those parabolic pullbacks. So stock is making that move, then it's going into the 9, it's giving us the new 5-minute high. Some people will be taking it to the long side, and what happens after that? It just drops down. That's why we need to wait for those W shapes, just in case, especially after the parabolic pullbacks. When do you know wait for W on the 5 or on the 1? If you're trading an ABCD pattern on the 5-minute chart, you need to see it on the 5-minute chart. After 10 o'clock, you need to also see the W shape on the 5-minute chart. Before 10 o'clock, you can see the W shape on the 1-minute chart because you're trading an ABCD pattern mainly on the 1-minute chart. Solon, can you rephrase your question? What do you mean? What are you using for charts? You're welcome. So Salim traded Apple. Did you trade Apple? Where is your entry? Okay, this is the daily. The 1-minute chart is not screenshotted well. Salim, we can't see the entry on the 1-minute chart. The 5-minute chart, I can see it. I guess you took it to the short. You got subbed out. And then you took it to the long and got subbed out. Was it like this? No, I don't. I use DAS Trader. DAS has the charts on it. Those are real-time charts on DAS Trader. I mean, this is my first day in trading platform. Is this the way it starts for any newbie? Don't worry about it. Like when you are starting, there will be a lot of mistakes. By the way, if you can't make sense of what I'm saying around here, because I know it's not totally basic. If you're totally new, some of the stuff I'm saying around here might not make a lot of sense. I would recommend you go through the education center, watch the videos right there, the technology, the essential videos, the strategy videos, just to understand the setups. And if you're an Elite member, watch some of the major strategies, Peter's strategies, Store strategies, my strategies, just to get an idea of how the market works. And then all this will make sense. Because around here, we don't really explain strategy and how to trade it. Sometimes we do, right? We mainly review the trades for those who already know some setups and know what exactly we're discussing around here. Still, if something is confusing and you can't follow up, you can ask me a question and I will try to give more details. So both of them were shorts, right? The first mistake around here on this short, Salim, is that this was already far, right? I mean, this was already extended. It did the average to range. Look at Apple on the daily chart. The average to range is $4. Once it dropped all the way down here, I personally wouldn't have been considering even to take it to the short side. The next thing, there were no pullbacks. So you are taking it to the short side and it's closing as a hammer. It's getting you stopped out. Then you're shorting it one more time. And again, there is no reason to short it around here. Now you're on a new 5-minute high. Wait for the pullback and then take it to the short side. The problem with this pullback is that it is a parabolic pullback, so you need to wait for the W shape. This thing, sorry, M shape. This thing is not giving you the M shape. I mean, it's giving it somewhere around here, which is basically so late, right? So personally, I wouldn't have caught short around here. Not here and not here. Here, it was already a huge move with no pullbacks. And that was a parabolic pullback. There was no M shape and it dropped down, plus the average true range. Better to wait for something which looks more clean. Yeah, exactly. Some stocks you just need to avoid. You can't just watch stock and try to force a setup on it. If it looks good, and you need to have a checklist when you're trading. and I have a checklist. I mean, not a checklist. I have it in my mind. For example, first thing I'm doing before taking a stock for a trend trade is check the average true range. If I see that the average true range still has room, for example, if I want to take it to the long side, I would look after that for a setup. If the setup on the 5-minute chart is there, that's awesome. But before that, I'll check the favorable direction on the 60-minute chart and the daily chart. Finally, I'll take a look at the 1-minute chart or at the 5-minute chart for confirmation candles. And that's basically it, right? Looking at Apple, first thing I'm going to do, look at the average to range. Average to range is $3.50. We already dropped like $3. Stop. This thing, I'm not trading. Just go and watch something else. Let's say this thing around here, let's say the average range is $6. I'm looking at the chart. Okay, we dropped $3. The average true range is still good. We still have around $3 to go, right? Next thing I'm going to do, I'm going to wait for a setup. Is there a setup around here? No, basically there is no setup. So what? Avoid the trade. Let's say you're seeing it around here. Okay, there is a setup. It's a reverse ABCD pattern. What type of reverse ABCD pattern? This is type 3. Do I take it? No, I need an M shape. You see, this is the way you need to trade. You need to know what you're looking for. That will keep you from those impulsive trades. And honestly, open range breakouts, they've been really good past 2 weeks. The week before that was horrible, but last 2 weeks, I liked orbs. I think it depends also on what you're watching. Yeah, Arthur, I'll do that. Just remind me or ask me this question once we're done with the review so that I don't forget about it, okay? Salim, the M shape will look like an M. So stock dropping down, it's pulling back parabolically, it's dropping down, and this is where you are taking it usually to the short side. Now with the parabolic pullback, you need to see another pullback and a continuation, and that would be your entry. That is the M shape because it looks like an M. And these around here will be candles. Going up, dropping down, coming back up, and dropping down. Hey, Peter B. Our millionaire today is Peter B. He hit his goal in like 5 minutes. 5 minutes and he was already up 5 or 6 hours. Basically waiting for a lower low and a lower high for entering. Yeah, exactly, Taz. Josie traded Arctic. Now this was awesome. I like it. A little bit risky, right? I would have waited for it at least to break this level around here, just to be safe. But still, the idea was right, and definitely long rather than short. Over partials, like those were so many partials. Look at this. You are partialing like almost within a few cents. Commissions adds up, and there is no reason to just partial the whole candle. Just be patient, wait for the price action to move, give it a few seconds to settle. If you see that it's ticking up, just wait, don't partial. Now it's struggling, okay, take a partial, right? Yeah, this is definitely something you need to work on, because this, especially on 1 minute candle, that's too much. If it was like the 15-minute candle and you're taking partial each 1 minute, each 2 minutes, it's okay, but on the one, that's too much. Yeah, I think he's competing even with Andrew. Even Andrew's partials are not this much, but it's okay. I mean, I know where we're developing these habits from. Andrew's trading momentum. He's getting his entries so fast, and he partials like so fast within 1 minute candle, multiple partials, but it's his style, right? And he's getting in so heavy, like thousands and thousands of shares, sometimes even tens of thousands of shares. And it's okay for him to partial. If you're taking only like 1,000 shares, 500 shares, it's not something worth taking partially this much. But the setup itself was really good. The ad around here was also decent, and this ad was also really good because it's an ABCD pattern on the 1 minute chart with a 5 minute opening range breakout. Around here, it was just a little bit late. This partial was enough. Other than that, really good job. Stop loss, by the way, was really tight. You shouldn't have put your stop loss around here. Remember how the candle is being traded like. It could go up, go down, come back up, and basically having your stop loss around here, it will just go down, get you stopped out, and then it will run, and you will really regret getting out because the market just grabbed your stop and then ran. This is the stop loss in here. Do you check the average range in DAS? Yes, check it in DAS. All right, most time, let's see this here. So most time traded day, key, and G, and this was really choppy, unfortunately. And you took it to the long side, and I would say a little bit early. It's just below all the moving average. Just if you take a look at this, oh my God, I need to bring the color to the green. If you take a look at this, it's just making lower highs, right? This is the first thing. The next thing, it's below the moving averages overall. So it was just a little bit really early to taking this trade. I know the 1 minute chart looked good. It broke this level or went for the break of this level. But overall, by this time, which is 10:30, you definitely need to pay more attention to the 5. The 5 is weak, right? And it's below all the resistance levels. I would have avoided this one. I personally would have been interested in it to the long side somewhere above this. I wouldn't have even taken it to the long around here. This around here would have been like the place to take it. Why is that? Because if I take it to the long here, I wouldn't know where to put my stop loss, and it would need to be somewhere down there. But at least here, there is a 3-bar play, and I can take it to the long side and put my stop loss at the low. Peter, let's see what you traded there. So, Riot, this is something I wouldn't have taken. Why is that? Simple. Like, this is like 3-bar play around here. Actually, multiple reasons. First of all, this is a third 5-minute candle, Peter, right? Despite it's small, it is still third 5-minute candle. On a third 5-minute candle, I personally avoid taking a stop for a continuation. The 2-minute chart and the 1-minute chart look so good. You got slippage around here. How many hours did you lose here? Yeah, I was watching Riot. 1 hour? Okay, that's good. I thought you lost more on it. I was afraid you had this as your stop loss. I was watching it. I saw that it first sold off and then it came back up. But still, it was holding the pre-market level. Is Gigi here? Where is Gigi? No, Gigi's not here. This is a rule Gigi made, and I actually like it so much. If the stock goes into the pre-market level literally to the penny and rejects it, either put stop loss to break even or exit at a small loser. One thing which I'm not doing is definitely taking it to the long side exactly at the pre-market level because of that rule Gigi made. I would have taken this thing to the long side if it broke at least the pre-market level. Dell Arcade here. A lot of you guys traded Rocket today, and I didn't even put it on my watch list. Now, this is the perfect entry. I love this one so much. So you were really patient. You waited for it to break the pre-market level because it was below the moving averages, right? And it was below this high. And taking it to the long here is a little bit risky because it could make a lower high and drop down. So that was really great patience, Dell. You had your confirmation, took it to the long side. Now you can put your stop loss somewhere in the middle. Add it for 1 minute open range breakout or 2 minute open range breakout, moving your stop loss to the last level it bounced from. Decent partials, not that much, still many, but not that much. This is a little bit late. You're adding way on the way up. At least here, when you had this ABCD pattern, it was decent. You're having a 5-minute upper range breakout with an ABCD pattern on the 1-minute chart. This is something okay. This ad I wouldn't have done because of the fake breakout and then closing as a shooting star, right? 2 big 5-minute candles. Fake breakout on the 1-minute chart, closing as a shooting star. I definitely wouldn't have expected a breakout around here and wouldn't have added, but the rest of it was really good. This was a risky ad in my opinion. I mean, the 50 to 200 are strong. Overall, the stock is also strong, so taking it to the long side is better than to the short side. You got it at a new 1-minute high. You were really patient with the partials, but one thing which I would have done, I would have at least waited for half of the candle to be engulfed, just to have that piercing candle set up, even though it still didn't close at that time. But really good job on both of your trades. How many hours, Dell? 4 hours. Awesome, good job. Okay, let's take a look at a couple more trades. J-bone traded BA, and that was a parabolic reversal J-bone. It's not literally parabolic. Around here, this is making an exception for an ABCD pattern, actually. When it's extended from the 9 and the 5, if I'm having double dojis on the 5-minute chart, it could make an ABCD pattern with a continuation to the long side. So I would have avoided this one around here, honestly. Peter, what would you have done around here? So Peter is taking over 1,000 trades on parabolic reversals, and I bet he knows even more about them. So let's ask him. Peter, if you were watching BA, would you have taken it at this place for a reversal? Yeah, look at this. You see, if it just goes sideways on the 5-minute chart for a long time, it just fails. Most of the time, it will fail. That's why on parabolic reversals, you want to see the 3 5-minute candles, then you want to catch it on this candle around here, and then take it to the short side. If it just gives you 2 candles or 2 dojis, after 2 dojis, it could be an exception for an ABCD pattern to take it to the long side, which also didn't work out, and which I also wouldn't have taken because of the average through range, right? We did a move of $10 or $12 to the long side, and that's way bigger than the average through range. So around here, it's not short and not long. Most saying we have time, so you can send one more. It's okay. Awesome. Okay, let's continue. So Bobby, let's see what you did here. Bobby traded rocket. Okay, we actually reviewed this rocket. Did you send 1 or 2 trades, Bobby? INSG. Okay, I missed this one. Awesome. So INSG, what did you do around here? We traded this thing for a 1-minute upper range breakdown. Now this was a little bit risky, honestly. I see what you did there, and I see why you did it. I would have also been short buyers on it. The 5-minute chart is dropping down, but now the 5-minute chart is making higher highs and higher lows. Because it's doing those higher highs and higher lows, I would have avoided taking it to the short side. If this 5-minute candle was looking like this, like candles going sideways or candles making lower lows, lower highs, then the 1-minute chart closes like it did around here. After that, making a new 1-minute low, I would have taken it. That would have been totally fine. But your entry here to the short side was on higher highs and higher lows. That's why I would have avoided it. Now, this is awesome. Look at this. This is what we discussed, guys. This is the bearish engulfing candle, and there is the crack, and it is with the direction of the trend for the breakout. That was an awesome entry. I love it, Bobby. Nice partial at the low of the day. Another good partial and another good partial. Really good job. That was awesome. I was looking CLOV. No, I wouldn't have done that. A CLOV already did the average through range. I know the setup that you mean. Actually, let me show that to the rest of the members here. I was watching CLOV, and then there was a reverse ABCD pattern somewhere around here. Yeah, 10-15. Yeah, there it is. So it's a reverse ABCD pattern with an M shape somewhere around here. But this thing already did the average through range, which is around $1, right? Oh, it didn't actually. Let's see, 990 to 940. Actually, yeah, it didn't do that. It still had room. Yeah, this would have been decent. Still, the hammers around here, I doubt they would have made me take it. I think I missed 950, right? Okay, let's take a look at 950. No, 950, I definitely wouldn't have taken it. Those candles incision, then there is a hammer. I would have been afraid this thing will do a higher low and come back up. And even this one is at least decent, because if you manage to catch it at a new 5-minute low, you could partial closer to the low of the buddies. I don't go against the wicks, but against the buddies, it's okay. And if it rejects this and starts coming back up, I would exit break even. And if it goes more, then you could definitely continue holding on to it. I think this one was the one which did the reverse ABCD pattern with the average through range. There it is. Yeah, FGN dropped around $4. It did the reverse ABCD pattern around here, but it already did the average through range. So that one I would have avoided. Peter SOS. This was your winner trade, right? Yeah, there it is. So Peter took SOS to the long side for an ABCD pattern in the pre-market, and unfortunately it got him out. I guess those two candles got him a little bit suspicious about it. I honestly would have been a little bit scared about it as well. Now that he noticed that this was a fake breakdown, re-entered into it. Nice partials all the way up, but again, the ad just ruined it for you. I mean, even without the ad, I think you'd have been sold out on this candle. But this was just straight going up. I wouldn't have added around here, especially on the third 5-minute candle. I would have let it open, especially that the open is coming in like 2 minutes. And I would have added after it just shows me the bottom on the 1-minute chart. Yeah, the ad was like a couple of minutes before market open, and we know that once the market open, the market will be volatile, and it's just highly unlikely that it will continue going up. Especially that this is like 1, 2, 3, and this is the 4th candle, right? You asked for a lot from this stock. I would have held to the original position. Have a good day, Dardan. So Molstein, what did you take around there? BA. Same thing with BA, right? Parabolic move, followed by parabolic pullback. And what do we wait around here? We wait for a W shape before we take it to the long side, because these things could easily drop down. They could easily make a reverse ABCD pattern. And that's why I wouldn't have taken this thing to the long side. It is a pattern on the 1-minute chart, but we don't trade that, even if it's on the 5-minute chart and making an ABCD pattern on the 5-minute chart, because it's like a parabolic pullback, it's better to avoid it. So there was, Zach, what was your question? Again, it was about breakouts. I lost it in the chat. Okay, my checklist for an open range breakout is this. 1, take a look at the daily and the 60-minute chart and identify the direction. Okay, and this is what I did on all of those stocks. WFC, direction on the daily chart long, the direction on the 60-minute chart will be long above this area. So I was waiting for it to go above this area and give me a setup, but unfortunately it just did it in 3 consecutive candles and I didn't trade it to the long side, right? DKNG, look for the favorable direction on the daily chart and the 60. The favorable direction on the daily chart is strong. The favorable direction on the 60-minute chart, on the daily and the 60, both long, but it basically started dropping down at the open. So I avoided, right? BAC, the direction on the daily chart is long. The direction of the 60 is long above 35.90 or 35.80. So again, this thing didn't do it, right? It just literally touched it in 3 candles, 35.90, and I don't take it to the long side on the 3rd candle. So I just avoided it. FSR, 3-bar play on the daily chart, strong on the 60-minute chart. That was it, took it to the long side. By the way, guys, this partial around here, that was my stop loss around here. So I had around 13 cents stop loss. This was an intended partial at the level, at the round number. This was intended partial, but the 3rd one was supposed to be a limit order around here. But unfortunately, I had market order on my montage, and I ended up selling at the same price because it was a market order. But yeah, this was really crazy. It was awesome. Anyway, Twitter, what's the favorable direction? The daily chart, long on the 60, long. What happened? It dropped down, so avoided it. Same thing on Disney. It's long there, long here, and it ended up being long even intraday. Not intraday, at least for the breakout. I was watching it for a breakout. Same thing on INTC. Daily is long, 60 is long, and then it opens, giving us an ABCD pattern. This would have been a decent setup, which unfortunately failed, but basically there was not much volume, which is okay. Baba, short on the 60, short on the daily, and that's why I avoided it. I avoided it because at the open, it was going up. And I said that I want this thing to the short side, somewhere below this level. And that's it. Look at this. Now we're breaking down. We're having the reverse ABCD pattern, and it's continuing to pull back. That's the entry. That's the stop loss. Unfortunately, there was not really a huge winner. Why wasn't it a huge winner? I have no idea. We still have average to range, some point in the average range. Now, Zoom. On the daily gap up, on the 60 stronger, was looking at it above this area, which didn't happen, right? This is the first thing I'm looking at. BA. Strong there, strong here, but at the open, it just drops down and then it's giving multiple candles, so I just avoid it. So yeah, basically, the first thing I'm looking at is the daily and the 60-minute chart. The next thing I am looking at is the 5-minute chart. I don't want to see 3 consecutive 5-minute candles. And if I see 3 consecutive 5-minute candles, meaning that 2 candles in the pre-market and then the market opens and it gives the 3rd candle, I'm not taking it. I want to take the breakout on the 1st or the 2nd 5-minute candle. For example, let's say I want to read this thing to the long side. This is the 1st, this is the 2nd, but this is the 3rd. I'm not going to take it to the long side. Finally, after I made sure that the 5-minute chart is not on 3 consecutive candles, let's see. Yeah, for example, this FGN, I want to read it to the short side, and it's like around the 1st, the 2nd candle. Same thing on CLOV, right? The 2nd candle, like this one was it. Now, after I made sure that this thing is not the 3rd candle, I checked view up. Best breakouts are those breakouts which are happening close to view up. So I want the price action or the breakouts to be somewhere around view up. I don't want the stock to be like, I don't know, Rocket maybe? Or what did we have? Something which start, yeah, Rocket, for example. No, not Rocket. Riot. Cool, Riot. I don't want the stock to be like Riot here, extended from view up. I will not, let's say this week is not here and this candle pulls back and then it comes back up and breaks out. I would not take this thing to the long side because it's far from view up. I want the stock I'm taking to be close to view up. So first thing, take a look at the daily and the 60. Second thing, make sure that it's not 3rd candle. Third thing, make sure it's close to view up. And finally, take a 1-minute open range breakout or take a break of the pre-market level. It's that simple. Salim, because that's not my setup and that's not my trade. I have trade book. I have my main setups, which are making me consistent. Breakouts, ABCD pattern, parabolic reversal. And each setup I'm trading is having its own checklist, what I want to see before I take a trade. There were a lot of trades I've seen today which actually worked and they went to the direction I expected them to go to, but I don't trade hunches and I don't trade what I think or where I think the stock is going to go. I wait for my setup to be there and then I take it. Anything else which moves without me, then it's totally fine. Will you go against wicks on the 1-minute chart if the larger time frame is the direction of your trade? Depends on how many wicks right there and depends on how the bigger time frames look like. If I have a few hammers on the daily, a few hammers on the 60-minute chart, the 5 is up, going up on waves, and the previous 5-minute candle is still bullish candle, but I'm having a couple of reverse hammers on the 1-minute chart, I would take the trade definitely. If the daily is looking a little bit bad, the 60 is a little bit bad, but both of them are long, and then on the 1-minute chart I'm having wicks, I would avoid it. A break of the pre-market level, Joe. For example, there is a pre-market level around here, and then the market opens and it breaks. That's something I would take, considering that I have everything else also there. You're welcome, G-Bone. Michael, I did a webinar on breakouts. Check for a webinar named How to Trade Breakouts. I made it in December, January, somewhere around there. In January, yeah. So that one you can watch. Is your trade book with summaries of your tactics available? It is available, but not all of my setups. For example, open range breakout is not in my trade book. I just stopped updating it because I have everything memorized. You can email me. I'll send you the one which I had before. It's not too many factors, and it's not so quick because most of those factors are determined the pre-market. Before market open, you already check the daily, you already check the 60-minute chart, you already check the 5-minute chart, and the only thing you're looking for is the 1-minute chart after market open. You don't do it like instantly, right? So you build your watch list, and I post my watch list like the main and the secondary in the chat room, and I also have a few extra stocks which I don't post, which could be potential breakouts as well. And I have my plan to trade each of those in advance. A related question, if you have time, how do you make your candle look tall? I don't know. This was the default. I can send you my layout if you want, but I never played with this. Yeah, Zach, that's it. Before the open, I already have my open range breakout watchlist finalized. Meow Mix. Oh, Meow Mix, you've been at BBT for 3 years right now. Awesome. So that's it, guys. Do you have any questions? How to put the average to range in chart like that? Okay, you do this. You right click at the volume area, for example, go to chart area, add new area before, then you right click on it, you go to study config, add the average true range, and commit it, and now you have it. Has your standard stock list for stock selection changed since the break webinar? No, XD Unknown, it's still the same. I still pick them the same way. You're welcome. Strategy when to enter the race and exit. I don't think we have something like that, but I'm making that webinar. When to enter, when to exit, when to bail. But I'm not sure if we're having something like that in the classroom. It will be 19th of March. It will be about parabolic reversals. I will update it with some new examples and some new rules. And then there will be one more by the end of March. So this month you'll hear a lot from me. Yes, Meow Mix, do that. It's ayman@beerbletraders.com. All right, guys, so thank you. I'm going to upload this trade review on YouTube. Have a great day, everyone. Don't overtrade, and I'll talk to you tomorrow. Bye-bye.